Iraqi Dinar Today latest news explores the intricate and often misunderstood world of exotic currency markets, focusing specifically on the logistics of exchanging physical banknotes of the Iraqi Dinar IQD and the Vietnamese Dong VND within the United States. For individuals holding these currencies, the process of liquidation is not always as straightforward as it might seem, necessitating a detailed understanding of the current financial landscape. This segment aims to deconstruct the current state of affairs, moving beyond general discussions to examine the specific protocols and procedures employed by both established financial institutions and emerging digital platforms when handling these particular assets. Navigating this environment successfully requires a high degree of preparation, attention to detail, and reliance on factual information rather than speculative chatter, which often misrepresents the complexities involved. The reality of exchanging IQD and VND involves a complex web of varying bank regulations, brand-specific policies, and evolving financial technologies, all of which contribute to a unique set of challenges for the average holder. A common and often costly misconception among currency holders is the belief that major financial institutions across the United States, such as Chase, Wells Fargo, Bank of America, or Citibank, maintain a uniform nationwide policy for the purchase and sale of Iraqi dinar or Vietnamese dong. The truth regarding acceptance is, in fact, far more nuanced and dependent on the specific location of the branch, frequently leading to disappointment for those who walk into a neighborhood bank expecting a standard transaction. While these top-tier banks certainly possess the internal capabilities to handle foreign currency, their willingness to accept and process what are classified as exotic currencies is often strictly limited to specialized locations. These are typically branches strategically situated near major international airports, within bustling financial districts, or in close proximity to diplomatic embassies, areas that naturally handle a significantly higher volume of international traffic and require specialized services. These specific, high-traffic branches are the ones most likely to be equipped with dedicated foreign currency desks and staff who are thoroughly trained in the verification and processing of currencies that are not actively or widely traded on the global stage, unlike the euro or the British pound. For this reason, the importance of preparation for any holder planning a visit to a major bank cannot be overstated, as simply arriving without prior confirmation and verification of their services can lead to significant frustration and wasted time. It is absolutely essential to initiate contact by calling ahead and specifically asking to speak with the foreign currency exchange department, bypassing the general teller who is unlikely to be versed in the distinct and complex protocols for handling IQD or VND. This initial outreach is a critical step in a successful exchange strategy. During this crucial initial telephone contact, the currency holder must inquire specifically and directly about the branch, his current ability and capacity to handle these particular currencies, as internal policies can and do shift without any public announcement due to changes in market liquidity, constraints, or internal compliance updates. Furthermore, it is important to ask detailed and specific questions regarding the required forms of identification, the current rate margins they are applying for the transaction, and whether an official appointment is necessary, as many of these specialized foreign currency transactions are not conducted on a walk-in basis. Adding another layer of exclusivity to the process, holders should be aware that some branches may choose to restrict these services exclusively to their existing account holders or to clients who meet specific high net worth criteria, underscoring the geographically and relationship-dependent nature of exotic currency exchange. Understanding precisely why the Iraqi dinar and the Vietnamese dong are classified in the financial world as exotic currencies is absolutely crucial for managing expectations and facilitating positive interactions with bank personnel. This classification does not imply that the currencies are rare in terms of sheer existence or circulation within their home countries, but rather indicates that they suffer from substantially lower trading volumes and limited global circulation when compared to the world's major reserve currencies. As a direct consequence of this lower volume and specialized nature, smaller suburban bank branches often lack two vital components: the real-time rate platforms required for accurate pricing and the physical expertise necessary to properly authenticate these specific foreign notes. This lack of familiarity at smaller locations often leads to confusion, false rejections, or the inevitable referral to a main, central branch in a major city. This is precisely why selecting a bank branch located near an international business center or within a large cultural enclave is a highly strategic and often necessary move for any holder seeking to exchange. The personnel at these specialized locations are far more likely to be specifically trained in the complex regulatory requirements and authentication procedures necessary to facilitate a secure and smooth transaction involving IQD and VND. For those individuals who discover that major banking institutions simply cannot accommodate their specific transaction needs, specialized private currency exchange offices present a viable and often essential alternative pathway. These professional offices are typically situated in global travel hubs or large multicultural cities, where the consistent demand for a diverse range of foreign currencies is consistently high and necessary to serve the population. The primary and most significant benefit of utilizing a private exchange office is their inherent specialization in the foreign exchange market. Their staff are expertly and specifically trained to handle a much wider array of banknotes, including the complex security features of IQD and VND, and they often operate with substantially fewer bureaucratic hurdles than are typically encountered at traditional, large-scale banks. However, this level of convenience and specialization comes with its own distinct set of trade-offs that must be carefully and critically weighed by the consumer, specifically concerning the overall financial cost of the transaction. Private exchanges may impose higher transaction fees or utilize significantly wider rate margin spreads, which effectively reduces the net amount the seller ultimately receives, making a thorough cost-benefit analysis vital before proceeding with any transaction. When engaging with private currency exchange offices, thorough due diligence is the essential first line of defense against potential inefficiency or financial loss. It is critically important to research these providers thoroughly, looking for third-party verification from reputable sources and carefully scrutinizing user reviews to accurately gauge their reliability and quality of service. Just as with major banks, a holder should always call ahead to confirm that the office is currently accepting the specific denomination and series of the currency they possess, as some offices may have limitations. It is also wise to request a preliminary rate quote and inquire about any potential holding times, as some specialized offices may require the currency to be left for authentication before any funds are officially released to the seller. Furthermore, ensuring that the private provider is fully licensed and insured is a non-negotiable step to mitigate risks, as you want to be completely certain that your valuable assets are protected throughout the entire verification process. This segment of the market provides an essential service for exotic currency holders, but it requires the consumer to be both vigilant and informed to successfully navigate it without incident. As the world moves further into the digital age, fintech solutions are gradually and fundamentally reshaping how individuals interact with foreign currencies, and the market for exotic exchanges is now beginning to feel the effects of this technological disruption, opening new possibilities for holders. In the modern financial landscape, an increasing number of fintech startups are actively exploring the feasibility of facilitating transactions for niche currencies like the Iraqi Dinar and the Vietnamese Dong. While mainstream, large-scale applications like Wise or Revolut have historically avoided these assets due to regulatory complexities and comparatively low demand, a newer generation of niche platforms is rapidly emerging to specifically fill this market gap. These innovative platforms often promise streamlined and transparent processes, mobile access for convenient rate monitoring, and advanced logistics solutions that can include secure home delivery or armored pickup for physical currency. This significant shift represents a genuine modernization of the market, offering a level of convenience and accessibility that was simply unavailable to holders of these specific banknotes in the past. However, the rise of these digital platforms also brings with it a new and heightened set of responsibilities for the user, primarily centered around stringent security and verification protocols. Before committing any substantial funds or sensitive personal information to a digital platform, the user must meticulously verify that the company is properly and legally licensed to operate in their specific jurisdiction, checking for formal ratings from established bureaus, such as the Better Business Bureau in the United States, and critically scrutinizing user reviews for any red flags concerning hidden fees or delayed delivery timelines, is an essential part of the process. While digital solutions offer tremendous potential convenience, they are not devoid of inherent risk, and the onus is squarely on the user to conduct thorough and comprehensive due diligence to protect their assets. Properly vetted and regulated digital platforms can indeed offer a seamless and efficient exchange experience. Still, engaging with unverified or poorly reviewed applications can unfortunately lead to significant and permanent financial exposure. Beyond the formal financial sector, in certain regions, particularly those with dense populations of Iraqi or Vietnamese communities, peer-to-peer currency exchange networks often exist as a localized, informal solution. These community-based networks rely heavily on trusted word of mouth connections and mutual reputation rather than formal institutional frameworks, operating exclusively on a grassroots level to facilitate exchanges between members. The potential advantages here are often speed and substantial flexibility, allowing for transactions to occur without the bureaucratic delays typical of large banks, and sometimes offering marginally more favorable rates. However, these informal community exchanges carry inherent and significant risks due to the fundamental lack of formal oversight, which dramatically increases the likelihood of encountering counterfeit notes or engaging in intractable disputes without a clear, legal path for resolution. Transactions within this sphere are largely based on personal trust, which can prove to be a fragile and insufficient foundation when significant financial value is at stake. If a holder finds themselves considering a community-based exchange as a last resort, safety must be the absolute priority, and specific, non-negotiable protocols should be followed to protect their interests and assets. Always arrange to meet in a brightly lit public space such as a cafe, library, or community center, and never conduct these transactions in private residences, which can create a dangerous situation. Bringing a third-party witness is a prudent and highly recommended step to ensure accountability and to discourage potential foul play, and the holder should always request some form of written receipt or detailed transaction record, even if it is informal. Furthermore, utilizing mobile currency verification tools or specialized applications to instantly check the authenticity of the notes in real time can add a crucial layer of security to the transaction. While these community-based exchanges can serve as a practical last resort in specific, isolated circumstances, they should be approached with an extremely high degree of caution and should never be treated as a primary or preferred strategy for liquidating substantial holdings of exotic currency. Beyond the logistical considerations of where to exchange, timing the exchange is just as critical a factor for maximizing value. For many long-term holders, this requires a fundamental shift from impulsive, emotional reactions to strategic, data-driven planning. Geopolitical developments within Iraq, such as critical oil production levels, political stability, and major foreign relations, play a direct and measurable role in the market-driven value of the dinar. Similarly, for Vietnam, key economic indicators like foreign direct investment trends, tourism growth statistics, and manufacturing outputs are primary drivers for the dong's global standing. Closely monitoring these macroeconomic factors allows a holder to understand the broader context of their currency's value, rather than relying on isolated rumors or social media speculation. Both the Central Bank of Iraq and the State Bank of Vietnam play absolutely critical roles in currency valuation, and their official announcements regarding monetary policy or foreign reserve positions are often the direct precursors to significant market movement. To stay ahead of the curve, it is highly advisable to utilize reliable and professional market monitoring tools and platforms, rather than relying solely on unverified social media chatter. Platforms such as XE Investing, Com, and various sophisticated tracking applications provide real-time data that can assist the serious holder in identifying genuine, verifiable market trends. Setting personalized alerts for significant fluctuations or verified news updates can help create favorable windows for action, allowing the holder to respond to data and economic health rather than simply emotion. Economic calendars that meticulously track official announcements related to GDP, inflation rates, and trade balances are invaluable resources for the serious and disciplined currency holder. By building a systematic approach that combines daily, professional rate checks with verified and official news alerts, a holder positions themselves to make informed and logical decisions based on the documented economic health of the issuing nations. Documentation and compliance are the often overlooked yet critical pillars of a successful exchange strategy, particularly when dealing with substantial sums of exotic currencies. Financial institutions are legally bound by strict anti-money laundering (AML) and Know Your Customer (KYC) regulations, which are applied with even greater scrutiny to currencies like the IQD and VND. When a holder is prepared to convert their holdings, they must be equally prepared to present valid government-issued photo identification, such as an unexpired passport or driver's license. Additionally, for large or substantial holdings, banks may legally require proof of currency acquisition, such as original purchase receipts, bank withdrawal slips, or clear statements to formally verify that the funds were obtained legally and ethically. For substantial holdings, this verifiable paper trail is entirely non-negotiable, and having all required documents meticulously organized in advance can often be the difference between a smooth, approved transaction and a sudden, frustrating rejection. This pre-transaction organization should be treated with the same importance as the exchange itself. The physical condition of the currency itself is another critical logistical detail that can have a significant and immediate impact on a holder's ability to successfully exchange it. Banks and private exchange offices typically require notes to be in pristine, near-perfect condition, completely free from tears, excessive pen markings, or deep stains. Notes that are visibly damaged, heavily worn, or suspect may be rejected outright because they become difficult, if not impossible, to recirculate or repatriate back to the issuing central bank without penalty. It is highly recommended that holders store their banknotes in protective, archival sleeves or secure folders to meticulously maintain their quality over the long term. This simple, preventative step of preservation helps ensure that when the ideal time for an exchange arrives, the physical state of the currency does not become an insurmountable barrier to the transaction. Vietnam's dong often receives less speculative attention than the dinar, yet it represents one of Southeast Asia's most compelling and reliable economic success stories. Over the past 2 decades, Vietnam has strategically transformed itself into a global manufacturing powerhouse, boasting a rapidly expanding middle class and significant, consistent trade surpluses. This economic reliability has led to increased integration into major global trade agreements, which in turn places significant pressure on the nation to maintain fair, transparent, and modernized currency practices in line with international standards. The International Monetary Fund (IMF) has frequently observed that the official value of the dong may be lower than what its strong economic fundamentals would otherwise suggest, fueling ongoing discussions about its future valuation in the global market and its eventual role. In recent times, Vietnam has proactively introduced updated capital flow monitoring systems and significantly enhanced transparency in its foreign exchange markets, ensuring its cross-border payment reforms align with established global standards. The noteworthy appearance of the VND in various testing and simulation environments within the U.S. banking system is an important developmental sign that suggests a trajectory toward greater interconnectivity and potential recognition. While this technical testing activity does not guarantee immediate public changes, it strongly indicates a level of coordinated activity that is consistent with a broader, long-term effort to modernize monetary structures. For serious holders, this signals that the currency is actively part of a dynamic, modern, and evolving economic ecosystem rather than remaining a stagnant, isolated asset on the global stage, giving a firm foundation for strategic planning. In the current environment, the risk of sophisticated scams remains a persistent and serious threat that requires constant and heightened vigilance from all holders. The exotic currency market is, unfortunately, a magnet for fraudulent actors who expertly exploit the hopes and lack of knowledge of holders with outright lies and promises of guaranteed, unrealistic rates or access to secret redemption groups. The golden, universal rule remains: if any offer sounds even remotely too good to be true, it almost certainly is a fraudulent attempt to steal assets. Holders should only ever work with verified, legally regulated currency exchanges or banking institutions, and must strictly avoid any arrangement that requires mailing their currency without a strict, legally binding agreement and full insurance. Ignoring unsolicited offers from social media groups or private, unverified seminars is essential for protecting valuable assets from bad actors. To strategically maximize one's position as a holder, the focus must remain fixed on the core principles of success: knowledge, strategic timing, and meticulous preparation. Knowing precisely where a currency can be exchanged, whether it be a specific, specialized bank branch or a fully licensed private office, forms the absolute foundation of an effective strategy. Basing all decisions on verified, current financial indicators rather than emotional reactions to rumors ensures that actions are taken with logic, clarity, and discipline. Furthermore, having all required legal documentation organized and the physical currency in impeccable condition removes significant potential hurdles when a favorable and necessary window for exchange opens. This disciplined, fact-based approach is what fundamentally separates the successful management of these assets from mere hopeful speculation. Diversification is another key and necessary strategy for long-term holders, serving as a vital buffer against the inherent volatility and risk associated with exotic currencies. It is financially wise to balance high-risk, high-reward holdings like IQD and VND with substantially more stable assets, such as the US dollar, the euro, or traditional, proven investments like blue-chip stocks and established bonds. The safe and secure storage of physical notes is also absolutely paramount. Considering a bank safety deposit box or a professional, secure home safe can protect the physical investment from theft, fire, or accidental damage. By building a comprehensive, thought-out currency action plan that includes both diversification and security, a holder ensures that their financial health is not entirely dependent on the performance of a single, highly speculative asset in the global market. Looking toward the future, the role of emerging fintech platforms and even localized community exchanges will likely continue to evolve, offering new and varying pathways for liquidity in the exotic currency space. While community exchanges must always be treated with extreme caution, they fundamentally represent the grassroots interest and demand for these currencies. Meanwhile, the potential for regulated fintech to eventually bridge the gap between exotic and major currencies could entirely revolutionize accessibility for holders worldwide. Monitoring these technological and regulatory developments provides a crucial informational advantage, allowing the holder to adapt their strategy as new tools and services become available. However, the bedrock of any successful approach should always remain rooted in verified, legal, and completely transparent financial channels for absolute security. In final summary, success with the Iraqi Dinar and Vietnamese Dong is not about discovering a secret, hidden backdoor into the financial system, but rather about completely understanding and properly navigating the legitimate front door. This involves recognizing that official acceptance is location-specific and highly specialized, that timing decisions should be based on verified economic data and official announcements, and that absolute compliance with all AML/KYC regulations is mandatory for large transactions. By staying continuously informed, avoiding the constant threat of scams, and maintaining a disciplined, fact-based approach to all holdings, one positions themselves to navigate this complex and specialized landscape effectively. Financial reward in this sector ultimately rewards those who are prepared, protected, and act with clarity and precision, rather than those who blindly chase fleeting, unfounded rumors.